Is this a healthy consolidation for Bitcoin or the calm before the storm? Hey guys, it's Keith Allen. Yeah, it's a little late for me today. Sorry. I've been super busy parenting today, but you know what? Glad to be here and wanted to give you an opportunity. Actually, wanted to take a look at the charts for myself as well and see if we can make sense of what's going on here as we head into the weekend. Obviously, things are changing here a little bit. This could indeed just be a healthy consolidation, but we're seeing some signs of weakness that are a bit concerning. So I think this is a good time to, number one, let some candles develop, and that also makes it a good time to take another look at the charts, kind of reevaluate things, make sure that we're happy with our targets and make sure that we're happy or maybe want to change some or reevaluate our invalidation levels. So that's what we're going to do here today. Going to try and keep it brief because big picture, not a whole lot has changed, especially to the upside. But really the biggest concern, I think one of the strongest things we actually had in the charts here yesterday was that we were holding support at the 50-day moving average for a few days. And we had like three candles above that. And today was the fourth candle and it broke down. So let's just go ahead and share charts and we can share it this way and talk our way through it as it's developing as we speak here, right? So first we'll head to the candle chart, then we'll look at fire charts, take a look at liquidity in the order book and see if we can get any more clues from that. So big issue for me was initially, obviously we had the breakdown 69K. It's been a long time resistance. We've just not been able to validate an RS flip up there. And, in the past week or so, we've seen the 21-day moving average, which is one that I really, really like, climb right up into that level of the 69K level, inched over it for, briefly for a couple of days. And then we see it curling back down here. So, that was obviously lost a big candle, but this candle made it to the 50-day moving average without wicking below. So I was good with that. Second retest came yesterday and it also didn't wick below. It was actually a higher low. I was good with that too. But today things broke down. Obviously, these moving averages are crossed a bit. 21 is green. The blue is 100 is the 100-day and the red is the 50-day. And look down here, the purple 200-day moving average. Look at that. Perfectly correlated with our lower low at 56.5. Here's a pro tip for you. We don't want to lose this level. Bulls don't want to lose this level because it's going to spell really kind of open the gates to paradise in my opinion. But let's look at some of the buffer zones we might have between here and there. 60K, 65K actually. It was interesting that these moving averages floated up to the 66K level. 65 was a stronger level for a while. And so we can see here in the chart that we have spent some time here in this 65K range here. And, we thought we had flipped that. Well, maybe, just maybe we haven't, right? We're testing that now. Right now we're well above 65. We're at 65,700. But if we lose 65K, my concern is that we get to this 60K level pretty quick because there's just not a lot of resistance here. We did have some consolidation here just above at 61 and change here for a little while. So this may be a stopping point. But if 65K doesn't hold, my concern is that we go here into this 58 to 60K range, which was an area of prior consolidation, right? Actually a distribution range back in 2021. And, I'm not confident that that's going to hold. And the reason that I'm not confident that it's going to hold is because liquidity currently is pretty thin in that area, right? So we do have a bit of a bid ladder here. And let me apply some contrast in the charts. We have a bit of support here at 65K, not a ton. It's like 16 million at the moment. And that has increased a little bit. And seeing those increases is good. Seeing bid support below it is also good. But the fact that this was all cleared out above and we were not able to move back above and go back after 69 at least, this was an indication because it would have been an easy move yesterday. It would have been an easy move after the dump. It would have been very easy to go back up there. But there just was not enough buy volume, not enough sentiment for that to happen. Therefore, it hasn't. And so if we lose 65K, then I do think that these lower levels could come into focus pretty quick. And I want to zoom out to a wider chart and see if we can gain a little bit more perspective here. If we look at where liquidity currently is and where it isn't, because that's important too, right? To me, liquidity equals sentiment. And if there's a lot of liquidity there, there's a lot of sentiment for that level. As we see above, there is a lot of sentiment for 71.5, right? There's a ton of ask liquidity above, over 200 million stacked up here. Meanwhile, down below, things are much, much thinner. And so I've been saying since this point, this looked good. This was our rally out. But ever since this appeared, I've been saying that I don't think we're breaking this level until we see more bid liquidity here. So seeing this ladder in place is good. But I would like to see this area at 65K strengthened. There's about 40 million there total in this range. But if we should lose this, then I think that we do take this liquidity down to 60. And as you can see, it's very thin below 60. And if we get there, this 58 to 60 was a consolidation range. You can see there's not a lot at 58. There's a bid at 60 and a bid at 59, but it's pretty thin down there. Also, interestingly, we have a little bit of liquidity here. This is very small, like $6 million. But the fact that it moved there is noteworthy. I think I'm going to blow out the the volume profile a little bit just to highlight this down here. Right. Look at what level this is at. This is at roughly between 44 and change and 45 and change on the chart. And now I want to show you why that is important. If we go back to the candle chart, we can see that we have areas, the two prior areas of consolidation that we have before we made it up to this level and below this lower low, should we lose it, would be the 50 to 52K range and the 40 to 45K range. And so this to me is an area that is very interesting to me. We spent a lot of time here consolidating. To me, this is stronger than this is. Up at 50 to 52. And if we look at the weekly chart, we can see that we actually have some confluence with the 50-month moving average in this range right here. And if there was a grind, if we happen to grind down, right, I don't think we're going to have a single candle that takes us down there if we lose this level. But if we do lose this level and we grind our way down, then we are kind of, this is kind of coming into play. Now, it depends on when things happen, right? This is my trend line for the year. And so say it doesn't happen until much later, then conceivably we're up at this level if it happened here. So my last line of defense for this bullish trend for the macro is this trend line. And right now that trend line has us actually below 40K, just sub 40K. We're right there at the 40K mark. Okay, so right now this trend line is at 40K, and that would represent roughly a 40% correction from the all-time high. That's not unheard of. In fact, it's relatively common after halvings. So I wouldn't be overly concerned about that. I'm prepared to go there. And I just want, again, I'm not saying that price is going there. I'm just saying that we need to be prepared for that if the conditions warrant that we lose these levels, right? So everything is conditional. If we lose 65, first line of defense is up here around this, 61 and change, 62. I showed you some of the liquidity there. That is the 21-week moving average. And losing this would, again, be another indication that things are breaking down at a macro level here. And so lower low, last line of defense that keeps us from really making that move to the downside. So I want to take another look at fire charts here before we wrap it and head into the weekend to see if we have any potential guardrails that could be holding us up here at least through the weekend. At the moment, 65 is holding, but there's not a lot there, and there's not a ton backing it up to make me, to give me the confidence that this holds. So the fact that it's pretty thin up here means that there is room to round trip this range, and we've seen this happen time and time again here, right? This has been the game that we talked about earlier in the week, and actually last Friday as well. We've been talking about this for a week. That these whales have been round tripping the range here around the economic reports, et cetera. And so playing the range is good, right? There's money to be made in both directions. But I just want to caution you that if we lose this level here, that it's likely that we're going to go lower and that these areas are going to come into focus pretty quick. 60K, you can see there's not a lot of liquidity holding things up here in the 60K range. So, despite what you've heard about Michael Saylor trying to buy another 500 million of Bitcoin, that's all good. That's all macro fundamental stuff, right? But remember, he trades different than you. Actually, he doesn't trade at all. He just invests and he buys, and his time horizon to sell is never. So that may be your strategy too, and that's great. In the long run, you're in the long run, if that's your strategy, if you have a long-term hold strategy, then you're probably going to be just fine. In the short term, you need to be prepared for some volatility, and there may be some opportunities to buy lower. So that's what I'm looking at as a trader. For those opportunities, I obviously have been holding in a position here. I have sold a little bit of that position to be able to reinvest at a lower price, and now I'm wondering if I am going to if I'm going to continue to do that. It, you know, is this as low as we go here at 65, or am I going to? Are we going to see a breakdown, and I'm going to have opportunities to buy lower again? At the moment, I don't have anything substantial in terms of my average entry price above 60K. So I'm in profit. What I'm wondering now is if we do break down here, are things going to break down further, and might I want to free up some powder to go buy potentially lower? That's the game here, guys. That's what works for me. You do what works for you. I'm not giving you guys advice of any way, shape, or form other than identify your targets, identify your invalidations, and manage your risk. In terms of how you trade this, it's totally up to you, and it will always totally be up to you. So that's the summary for me, guys. If you're looking for the written analysis, I do have more to come. I've actually started it here in the YouTube post. I'm going to add a little bit to it here, and then I'll post that on the other channels as well. I appreciate the support, guys. If you enjoy these live streams and are getting any value out of them, please share a comment with me. Let me know what's working for you, what you like, what you don't like, or potentially what you want to see in the future. Love the comments and appreciate the support. And as always, smash all those buttons. Help me grow this channel. That is what keeps this thing going. With that, we're going to wrap it. I'm not seeing any, if in terms of potential guardrails, I'm not seeing a ton in here that gives me a lot of confidence. I would say 65 is the strong side of what we're seeing right now. And obviously we have some strong resistance above 71. So do with that information as you wish. I think that there's a chance that we see things maybe just kind of chop for a little bit, and then Sunday the volatility ramps up as we get near the weekly close, as that typically is the case. So head outside, touch grass, enjoy your Father's Day weekend, and happy Father's Day to all the dads. Have a great weekend, guys.